Hi everyone, today let's talk about the Fed minutes, then we'll take a look at the charts, and then we'll take a look at my results for today and positions going into Friday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Happy Thanksgiving, and let's get started. So there's absolutely a ton of content here, but I'm just going to hit the highlights and the things that I thought were the most important going forward. They highlight here that they say that 75 basis points was the previous expectation, but the open market is currently expecting 50 basis points at the December meeting as the most likely outcome. Treasury yields did react to that and have tempered slightly. But it is good to see that they are acknowledging 50 basis points as a possibility, and my understanding is that it's about a 75% chance now that we see a 50 basis point hike in December. So this starts to be a little bit double-edged here, so decreasing the amount at which we hike at each meeting is good for markets. Slowing that rate should give the market a little bit of breathing room, but it's also an indicator that they are seeing weakness in the economy and that they need to start slowing down. So weakness in the economy is generally bad for markets, but also slowing interest rate hikes is good for the economy. So they're trying to balance how fast they hike with how much they slow down the economy. So just be aware of that. They mention here that they saw GDP grow at a moderate pace in the previous quarter, which is what you want to see. The economy is not overheated at this point, and it seems like inflation is coming down. And that's really what they mention here. The CPI report was elevated, PCE was elevated as well, but they were also below expectations and trending in the right direction. They mentioned some of the other economic data points like the war in Ukraine, headwinds in China, and the tighter fiscal conditions that they are creating as weak points for the overall economy, and those are things that they are considering when they're talking about rate hikes. In this section on staff economic outlook really highlights what I was saying. They say inflation is still stubbornly high, but they are seeing deteriorating economic conditions, sluggish private spending, deteriorating global outlook, tightening fiscal conditions are all seen as strong downside risks. And lastly here, they still say inflation risk is tilted to the upside, meaning that they think inflation could still go higher, especially if some of the global issues affect energy prices, which could generally lead to that wage price spiral, which would be very bad for the economy. I'm not going to give the full definition of this, but basically this is where wages continue higher and prices continue higher, and they both push each other up over time. And then they mention economic risks are weighted to the downside based on all of the things that we've mentioned before. So they understand that the economy is potentially going down and probably looking at a recession next year, but they're more concerned about inflation, at least in the short term. So what does this mean for us as investors? Basically, it means that the market is probably going to go down at least a little bit and sideways for at least the next 2 years or so. I don't think we're going to see a huge push to new highs, but I don't think we're going to fall through the floor at this point either. Moving over to the S&P 500, I think it's very clear at this point we're going to get up to this 410 over the next few days. And what happens once we get there is the big question. So this rally has been very strong, big up moves, momentum, getting very close to overbought here on the RSI. But once we hit here, what's going to happen? Are we going to make that lower high and then we're going to come down and make new lows? Or are we going to test this midline back in this 383 range? In my opinion, I think we're going to go sideways. I don't think we're going to make new highs here. I don't think this is going to be a breakout. I think this trend is going to hold. It's been strong for quite a while. I think we break down at this point, but I don't think necessarily we go down and make new lows until we start to see corporate earnings starting to fade out. And we see that economic downturn that the Fed is talking about. We really haven't seen that quite yet. Earnings were a little rough this last time around, but not nearly what we would expect out of an actual recession. So I think we come up here, we touch, we got a couple more points of upside over the next few days, but then after that, be very cautious. And I would start to look to the downside here once we hit that point. Moving over to the NASDAQ, similar story here. I think we get up to $300 on the NASDAQ, about 10 points higher than here. And then I think we're going to turn around. Do I think we're going to make new lows? Maybe not. I used to think we would touch those pre-COVID highs at about 237, but based on what the Fed is seeing, until we see that economic downturn, I think we're going to go sideways, and I think 254, 255 is a solid bottom here for the NASDAQ. I do want to show you the NASDAQ chart here on the Tasty charts, just so you see what I'm looking at. Once we get into this 300 range, just about the top of this daily chart ATR range, that's going to be a pretty good indicator. I'm going to look for overbought conditions here on the volume zone oscillator. Volume is starting to weaken. You can see the downtrend in volume, despite the fact that the markets are moving higher here. So it looks like a weak rally. Everything is saying that we're still going a little bit higher, but not for much longer. Moving over to the IWM, still looking at upside of around 191, 192, which is quite a bit of upside from here. But on the daily chart here, again, still have that downtrend. It seems like we're going to fail. And that 164, this low that we've touched several times, should be very strong with a lot of buyers. Might be a triple bottom situation, or maybe we find some support in here at 176, 177 range. And then we get some sideways price action. But in my opinion, I don't think we're making new lows here on the Russell. Moving over to IYT, the transportation ETF. This is going to be my lead indicator. I think we're going to hit resistance sooner on IYT before the S&Ps or the NASDAQ. I think this is going to start moving to the downside ahead of the S&Ps. And once we get that divergence, that should be a pretty good confirmation, in my opinion, that the rest of the markets are going to follow suit. Transportation should be a leading indicator similar to what we saw here in August. And it should be a good indicator here again in November. We bounce off this level, start moving down, while the rest of the markets are still moving up at least a little bit. And then that divergence gives a clear indicator that we're going lower. Moving over to consumer staples, I know we've been talking about it quite a bit because it's been on this relentless rally. Still waiting for this to fail. Very overextended here. Definitely overbought on the RSI now. And once this fails, that again should be a pretty good indicator that the overall S&Ps and the NASDAQ are going to go lower. And the fact that consumer staples is rallying here is another good indicator that the economy is going to be moving downwards because people are looking for more risk-off investments, which is exactly what consumer staples are. Moving over to top gainers for today, we got Trade Desk. This stock has been on quite a roller coaster. We have the big $40 support here that it touched all through June, rallied up huge through August, came down all the way into November, and then touched that bottom once again and found very strong support here. And then it's been fading here as the rest of the markets are going up, which is interesting, but it seems very solid if we get back into that $40 range on Trade Desk, that we should see a break to the upside. And that's really where I would be looking for entry again on this downtrend that we've been seeing here recently. Otherwise, it's certainly possible that this is a reversal. It's very strong here today, but that could be just along with the rest of the markets going up. Moving over to the S&P 500 divided by the M2 money supply. This is a very good chart to pay attention to. And as you can see, the trend looks kind of similar to the S&Ps, and we're right at that resistance once again. Seems like everybody's talking about how we're going to hit this resistance here. We did have to adjust these a little bit here, but as you can see, we're right just a few points away here from touching that resistance. And for me, I think we're going to get a double bottom here on this chart, regardless of where the price of the S&Ps actually are, similar to the pre-COVID high and the high that we had in November of last year being at the same exact point on this ratio. I do think that we're going to get a double bottom here on this chart, and that may or may not mean that the S&Ps or the NASDAQ are making lower lows. But when this ratio gets back into this zone, I do expect to bottom out at that level, and then we should see a little bit of a move higher from there. So I'll be looking for this to time my bottom, and this will be a good chart that I'll keep in videos going forward. Moving over to the dollar, this is the one chart that I think is kind of throwing a wrench in that reversal story that I'm trying to tell. If this does break to the downside really dramatically, that should be bullish for stocks, and it could present an opportunity for stocks to break above those resistance lines that we're going to be coming into contact with over the next few trading days. If this breaks down, it's certainly that we do get above those resistant lines and make some new highs. So definitely keep the dollar on your charts. Make sure you're watching it. This would be a good indicator that we are going to make new highs if this does break down really dramatically here, similar to what we had throughout November. If we get below this 104.50 level and we're coming back all the way down to like 108.80, that's going to be really bullish for stocks. And like I mentioned, could present the opportunity for some new highs. Moving over to JNK, you can see we had the big bounce that we've had over the last few days rallying with stocks. But again, we have that resistance sitting right at 92.75 or so. Seems like we're going to hit that in the next few trading days. And I would expect we're going to get a rejection similar to what we had here, coming back all the way down to this lower trend line, which was definitely bearish for stocks and definitely bearish for growth. As the risk comes out of the market, we'll see JNK move down along with the NASDAQ. Moving over to TLT on the daily chart, we've been in this relentless rally and we continued higher again today, gapped up actually all the way to 103.25 from about 101.50. So big move higher, looking at this 144 EMA here for resistance at about 109.50, which is a couple points higher here. But at the rate that we're going, we're going to get there within a few days, and that should be right on time for a little bit of a reversal, which should be at the same time that the markets hit resistance and move into that reversal as well. Finishing up with the VIX here for today, we have the lows that I'm expecting to see right at 1950 or so, the lows we saw here in March, as well as August. And we've been on a tear to the downside here on the VIX. And it just seems like we're going to hit right here over the next day or two, maybe even break lower to 1660 or back at these previous lows in December. If we do that, that's definitely going to be a good indicator to me that the markets are going to be looking for a reversal, and we need to see some upward movement here in the VIX before we look at getting back into the markets with any kind of scale. Right now, I have most of my money out of the markets because of this kind of condition. I do think there's a few more points of upside over the next few trading days. This is going to be a good indicator that it's going to be time to get out here pretty soon. Moving over to my accounts, you can see I made $261 here today, up to $93,316. Made some money on some IWM puts. Looked like we were rallying throughout the day, so I did jump in a little bit, and we held through the Fed comments. I did take the same position here for Friday as well. Only got 36 cents for that position. I guess it's only one trading day away, but still very little credit here left to be had as the VIX is very low. As the VIX goes lower, those credits are going to be harder and harder to come by. So be aware of that as an option trader. I did sell a covered call here. So I purchased 100 shares and I sold the 289 calls for 76 cents. I did buy those back for about 5 cents, so I made about 70 cents on those. So this is actually a net profitable position, and I rolled that put down and out to the 288 calls for $1.47. Not a ton of profit to be had here. As you can see, it's already at 288.82, and I sold this for $1.47, so really about 75 cents on this position to be made. But it does give me quite a bit of downside protection if we do get a move down on Friday. I also sold a 287 put here for 85 cents in the midday or so, 36-cent profit there. And then I sold a 288 put today as well for 62 cents. So all profits here today, nice little up day, just squeaking out those small profits before we see the reversal. Let me know down in the comment section what you thought of the Fed comments. Is the economy going to go down and make new lows in the stock market? Or is the slowing Fed interest rates going to keep the market stable? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Happy Thanksgiving and good luck in your trading. Have a great day.